Okay, Palantir is currently trading at $69.99 and ARM is at $144.38. And for my December 2026 price projection, Palantir's EPS is expected to rise 70% from 20 cents today to 34. And even though their current price to earnings is $3.50, I'm going to use $1.90 for this calculation because $3.50 is very, very high. And typically we see those crash once they hit the high hundreds. And that would give us a stock price of $64.60 a share, which is an 8% decline from where it trades today. As for ARM, their 2026 EPS is expected to rise 225% from 61 cents today to $1.98, and their current PE is around 237 right now, and again, that's also really high. So I'm going to use a PE of 115, and that would give us a share price of $227.70, which is a 58% upside. As for one-year price forecasts, it looks like analysts are bearish on Palantir with a 35% downside at $44.85, and for ARM they're expecting $154.60 or a 7% upside. Onto earnings, both have beat all four of their last earnings calls, and in terms of revenue and net income, both are looking really good on that front. Neither of them offer a dividend, of course, but for debt to equity, both are sitting pretty. Palantir's at 6%, ARM at 4%. Free cash flow per share is also great at 41 cents for Palantir and 50 cents for ARM. Overall, even though their businesses, they are quite different. Palantir's in the cloud data space, ARM makes chips. There are a lot of similarities from a metric point of view. That said, though, in my opinion, Palantir is going to be a sell and ARM is going to be a buy. Palantir is a sell because the PE of 350 does look like it's starting to peak, and like I said, once PEs start reaching those high hundreds, they fall, and they fall very quickly, and the only real way to mitigate that is with EPS growth, and Palantir just doesn't have enough of it. I mean, when your projected EPS is only supposed to rise 70% in 2 years, and you have a PE of 350, it's not going to have a soft fall. And ARM's kind of a different story. It's the same sort of PE, same very high in the high hundreds, but they have stratospheric forecasted EPS growth at 225% compared to Palantir's 70%. So for that reason, I think ARM has a much better chance of riding out any valuation correction, and that is why ARM is a buy and Palantir is a sell. And if you want to see a stock that I like but would certainly never buy, go over and check out this video right here.